Okay, the title of this video is The Pimperation of America. This is going to be a video series that we're going to use to discuss exactly what's been going on and things that you're probably not privy to and you need to be made aware of. So before we get started, here's the disclaimer. It's in the bottom of the video. You know what's up. Alright, let's move on. You're looking at a chart of the bond market, ticker symbol TLT. You can also use the bond futures, the ticker symbol ZN or ZB. You can even use the ultra bond futures contract. It's up to you. But what you're looking at is the complete pimperation of America. Pimping us out every day. They say and do whatever they want. They feed lies to you through the mainstream media to the point where you're straight up hypnotized. They tell you exactly how to think and what to think. And then when someone comes along and tries to deprogram you, it's a very, very difficult and daunting task, to say the least. First things first, as you look at this chart, the thing I want you to really look at and the thing I want you to really understand is how this downtrend from this point here between September the 28th and September the 29th, you topped out, and from that point on, you've been hearing talk about quantitative easing part 2 and how they want to feed liquidity into the system, keep interest rates low, while all along they're crushing the bond market. You can't keep interest rates low while you're crushing the bond prices. It doesn't work that way. Yields move inversely to price. As prices of the bonds get lower, the rates go higher. The yields, the interest rates go up. If you want interest rates to go down, then you pump up the price of the bond, like here, so that those yields can come down, so that you can have those historically low interest rates. You know, here we look at this long spiking up process. Okay, been doing it for a long time, still up and going. Look at that. Now they pull the plug. Here you go. The jig is up. They've been telling you that they want to do one thing while doing something totally different. Look at the red. Look at the bloodletting. They gave it to you, and now they're taking it back. So you can expect further price declines as we've already dropped below trendline support, and we're on our way well within an established downtrend. This is a weekly chart, by the way. You're bearish. There's no other way to say it. Sell. Your last pulse wave breakout was here on August the 20th, the week of August 20th. From that point on, we just got a confirmation on the week of October the 29th that the negative pulse wave support was broken, and it's been downhill ever since. So from the confirmation on the 29th, we hit the low of 99.16. We have now dropped to 93.81. There you go. We are well below par now. Alright, so that's just one thing they're doing. They're pulling the rug on the real estate market. Rates have no choice but to go higher as the yields come down. It's just how it is. As prices come down, the yields are going to go up, and that's just it. That's the way the game is done. Okay? So you can expect foreclosures to really ramp up now, regardless of what you hear them saying on TV. You can expect foreclosures to go to record highs, especially next year. So they're saying at this point they don't care anymore. Just let whatever happens happen. Also, you'll notice this as we switch charts here. Take a look at what happened today, for those of you who don't know, in your beloved Dow Jones Industrial Average. As soon as I open the thing up here, what is this? Oh, pops up a signal. It says the swing VIX just crossed below its signal line. This is a bearish signal. Well, as we can see, there is massive profit taking coming into this market now. This is starting to look like that bond chart, isn't it? Nice run up here. Now we're pulling back. Now, one word of caution is that we've run up so hard, your bullish consolidation cloud is here. All right, so you got some more downside potentially you can go, and you can still remain bullish. But make no mistake about it. Once we get a confirmed pulse wave on the downside, that's usually the beginning of the end. Rarely do we see a pulse wave scenario where the market recovers and the trend stays intact. It is a rare thing indeed for that to happen. Now, mind you, on this bar here, August the 11th of this year, we have a confirmed negative pulse wave. Market continued to go lower, even broke trend line support, right? All right. Then we kind of built a base here, and then we broke momentum to the upside, hence your pulse wave here. And we continue to rally at that point. So you have an immediate V-shaped recovery, as you can see. Okay. So it can happen. It can happen. Just like here on July the 1st. All right, we didn't get any continuation here. We got a confirmed pulse wave, negative pulse wave here, but there was no follow through on the next day. So that, in and of itself, could happen again. And then you see here, the market managed to rally again before it sold back off. Okay, and it only moved an additional, let's see, from here 10,532 to here 10,719. So just barely 200 points before it collapsed again. So it's possible that we could have a quick V recovery from this pullback. But on the other hand, we could have another bond chart that continues to come down and breaks the cloud and continues to go down and down and down and down. As traders, again, we're not married to any particular position. We will go long just as well as we go short, but we do like to wait for confirmation of these signals for trend changes before we make those decisions. Now, of course, you can try to scalp and day trade as best you can, trying to predict tops and bottoms. Of course, in the long run, that's a loser's game, but you can be right a few times and make a few coins with that. But it's not the way you want to approach the market. You want to catch the beginning of trends as they develop. Right now, this is not really telling you a whole lot. It's just telling you that we're retracing some of the upward move. So really nothing to be excited about until we break pulse wave. We break negative pulse wave to the downside, and that's all she wrote. All right. You would hope and pray, if you're still holding long positions at that point, which I don't see why you would, that we would get no follow through and have a quick V-shaped recovery back up here. So that will remain to be seen here in the Dow Jones Industrial Average. Again, if it does break negative pulse wave, then you can just assume that we're going to have a chart that does this and a chart that does this. Look familiar? This here is the week of May 6th. Remember those videos where I warned you what was happening? Remember this day when I warned you that we broke negative pulse wave to the downside a day before the flash crash? Remember? Go back and look at those videos where I told you that volatility was building up. See these points here? Remember? I told you that. I showed you all this. And I warned you that explosive volatility was coming. And then we had that flash crash. Well, guess what? We don't have that building here. So you can rest assured. Right now the market is actually moving the way it's supposed to in an orderly fashion. This is more profit taking than warning of a flash crash. This is just profit taking. We broke first and second support for trend line support here, but nothing to write home about. Nothing to really be frightened about until we break pulse wave. Now, I will note that we hit a low in the cash Dow today of 10,978.93. All right, I won't ignore that, but I will point out that trendline support was at 11,020, which I mentioned earlier. Now, the good news is that we didn't close there in the cash, but we came within 3 points of it. So we're safe for now. We could actually call this a bottom or a temporary support. All right, but then that would put us in a range-bound market now, from top to bottom. So we could just go like this and go nowhere for a while. All right, all we did is expand the range, or begin the beginning stages, or I should say initiate the beginning stages of a consolidated market, where we just drift up and down here. All right, that's possible. All right, but the market could still hold up here. All right, now this is not taken into to account what's happening in Ireland and Greece and Portugal and Spain and blah blah blah. This is just technical analysis of the chart. That's all I'm saying. You know, trade the pulse waves. That's all I can tell you. That's a sure way to know exactly what to do in any market. Is let the market confirm those pulse waves, or if you want to be aggressive, go ahead and put your buy and sell tickets in right at the pulse waves, and let the market come to you. You can do that too. Those of you who subscribe to the Black Ops Trading Room, you know exactly what I'm talking about. So take a look at those spreadsheets and be ready for your price triggers for tomorrow. All right. So let's take a look real quick at gold. All right, looking at the gold chart, so you can see what the support levels are here. All right. This one here is just about done. It's right at the tip of the trend line support here. Your first support is at 1323.08, and the base of the support in the Kumo cloud is going to be at 1281.04. So that's giving you quite a range between 1323 and 1281. All right, you can consolidate within that range within the cloud, still maintaining your semblance of bullishness. Your major trend line support is going to be around the 1325 level, something like that. Yep, somewhere around there. I'll give it 1325-ish, something like that. Yeah. Another thing you want to note too is that we got to 1329 today, and that's just a few points above that pulse wave there. We need to stay above that 1325.34 pulse wave. That's your negative pulse wave support. If we break that and close below that, it could definitely set up the beginning of a possible trend change. I just want to make that notation. Spikes into here, as long as we can remain at a certain threshold, then we can stay in the cloud and be fine. But also understand that the longer you stay in the consolidation cloud, the more pressure builds up, and when the break happens, you want it really, if you're bullish, you want it to be to the upside. But if it breaks to the downside, it does spell the end of the bull market as you know it in gold. Again, this is irregardless of the fundamentals. We're not talking about any fundamentals or any economic issues. We're just talking about charts, and we're talking about prices and price movements. If it breaks the pulse wave support, that could be all she wrote. All right. Stay tuned for some other parts in this series. The sad, unfortunate Pimperation of America. Remember, take what you can, give nothing back.